We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners, Burke Financial Partners.
So, this is the Finances podcast. This is episode number 82. I'm joined by one of my usual co-hosts, founder, director of Burke Britain, Peter Burke. Dad, how you going?
Good, mate. Thank you. Thanks for having me again.
No worries. And honoured and excited to introduce our next guest, founder and director of Future Generation, and founder and chairman and chief investment officer of Wilson Asset Management, Mr. Geoff Wilson, AO. Geoff, thanks for joining us. Thanks for joining us from your Tesla park there in Noosa car park somewhere. Thank you.
Thank you, Jay. Unfortunately, I've got a few technology problems. That's the disadvantage of sort of having a holiday place in regional centres. The technology doesn't always work. So, as you pointed out, I tried to find the quietest car so I can sit here, and it's great having Peter and yourself. Being able to talk to you guys about hey, whatever you want to talk about. I'm sure. Well, a lot of it will be investing.
Yes, a little bit of it anyway.
Listen, Helen had done a great job and sent us a very extensive bio, but rather than me just regurgitating or reading that bio, what I thought is I'd like to maybe follow a bit of a chronology through your history, both personal and professional, leading up to, I suppose, where Burke Britain intersected with the Future Generation companies. Peter, I might get you to give us a brief introduction to where we crossed paths with Geoff, well, not Geoff personally, but Geoff's companies in sort of 2018. Before you do that, I thought I might just read a little introduction on what the Future Generation companies are, and we'll get Geoff to expand on that in a second. But the Future Generation companies are Australia's first listed investment companies, or LICs, to provide investment and social returns, offering a unique opportunity to invest with leading Australian and global fund managers while supporting high-impact Australian youth-focused, not-for-profit organisations. So, Peter, maybe we were talking just off air about our introduction to FG, and not Geoff personally, but the FG group of companies. Can you talk about that before I get Geoff to touch on the FG origin story?
It'd be my pleasure. We had the pleasure of starting to use the FGG, the FG Australian version. I reckon it was probably was very soon after you listed, Geoff. I reckon, if I'm saying 2014 or 2015, thereabouts. And then this was through our broker that was helping us with a lot of the share purchases for our investments for our clients. And then I think it was only maybe a couple of years later, FGG, the Future Generation Global, and we were using that as well. And over a period of 3 or 4 years, our broker at the time said, gee, you understand that this is a philanthropic business that you're investing in, and there's a fairly significant amount, 1% of the value of the shares are directed off to charities. And you guys have now got some scale. The Burke Britain business with our wonderful clients had a little bit of scale. And he said, I reckon it's worth talking to the people at Geoff and the people at FG to see whether maybe we could have some control over the direction of those philanthropic funds. And as a result of that, I remember meeting with yourself and Carolyn, I think, at the time, at the Western in Melbourne. We organised a meeting up there, which was, I think, around July or August, middle of the year sometime. And very quickly after that, all of a sudden, we were blessed with the opportunity to take a significant amount of money and decide where it went. So that was sort of we used the share because it was a good business. It was a good option to use through our broker. And then that woke us up to the opportunities that it might present. And you and your business were great in allowing us the control over the distribution, the choice of where those funds went, which has been wonderful for us and our clients and the communities we support. That sort of covered, Jay? Do you think that covered what you were wanting?
It does.
Have I missed anything?
It does. No, I've done a great job. And I think obviously we've interrupted the chronology because FG history goes a long way before it intersected with Burke Britain. So, Geoff, at the risk of having you, like Peter does, go back many, many years, would you mind giving us a bit of background on yourself personally, but importantly, sort of the origin story of FG and your own sort of philanthropic thinking and influences that have led us to having the relationship with you that we do today?
Okay, look, thanks, Jay, and thanks, Peter. Thanks for including me on this podcast. And probably if you go through my life, I was one of 6 children. You probably don't want me to go back that far, Jay.
It's all right.
No, you can go back, Geoff. It's all right.
I was one of 6 kids. My mother was a nurse. My father was a doctor. I was brought up in suburban Melbourne, middle-class family. And I suppose, in terms of coming back to Future Gen, where does that fit in? I suppose we're always taught growing up, it's important to give back to the, to the community you live in. Then we sort of fast forward. I ended up starting off in Melbourne in the funds management industry, back in 1980 after uni, doing a science degree at uni. At Scottish Amicable, I was there for a few years, then realised that the broking side, stockbrokers sort of tended to have a bit more fun, and I was in my early 20s, so I moved across as a young analyst into broking, ended up going to work in New York for a period of time, London and New York for a period of time, with an Australian broker. Came back to Australia, and probably about 25, 26 years ago, went back to funds management and set up a funds management business called Wilson Asset Management. Now, obviously the real focus, Maslow's hierarchy of needs, you're focused on making money, obviously making a difference for our investors, trying to perform for our investors, perform for ourselves. And as the business grew, and now we've got about $5 billion. We manage in listed investment companies for about 130,000 investors. But go back about 10 years ago, so I've been going for about 15 years, the funds management business, saw a model. I was in the UK and I saw a gentleman set up a model where he went around to fund managers and said, everyone, who's seen a poor fund manager? It's very hard to find a poor fund manager. The fund managers, they're making enough money. And he went to them and said, look, can you manage a pool of money for free? And instead of the fee going to you as the fund manager, we'll give that to the charity. And I saw that model and I thought, what an incredible model. I'd love to do that model in Australia. And as Peter quite rightly pointed out, then I've been in funds management for a period of time. I thought I can go around and ask all the fund managers I know, the good guys, the best boutique fund managers in Australia, that manage Australian equities or global equities, and ask them to manage the money for free because they still get paid. Say they manage, say we're managing $5 billion, we get paid for that. And if we manage another $500 million for free, it doesn't cost us any more. So it's actually quite an easy ask. And then that, so the fund manager's managing money for free, and the money that would normally go to him then would go to charities. And and that was we copied the model out of the UK, and we created FGX being the Australian one, and Future Gen Global FGG being the global opportunity to invest. And with that money not going to the fund managers, going to charities, and when you guys have your finger on the pulse, you worked out very early on. We said if you're a big shareholder, then you can direct that money to people, the charities in your community. Now, the focus for both the Future Gens is children, children at risk, youth mental health. And to me, the beautiful thing is, yourselves, I think you've donated, getting close to $1 million to people in your community, and like they're, kids focused, charities. We'll probably go through a few of them a little later. Youth mental health. Like to me, it's fantastic that this happened. And the interesting thing is, one of my cousins came to one of the presentations 10 years ago when we're setting FutureGen up, and he said, "Hey Geoff, I just realised what you're doing. You actually want to get the smartest fund managers to manage some of your money, but you don't want to pay them." and you're happy for that 1% to go to charity.
There's always a win-win. Always a win-win.
Well, it is. Everyone thinks, these fund managers. And the beautiful thing is, we've got the boutique fund managers that normally, if you gave your money to those boutique fund managers, like we charge 1% and a 20% performance fee. But if you put your money in FutureGen and we're managing a little bit of that, then it's only 1% going to charity, and that performance fee that we would normally put in our pocket as a fund manager, we leave in the company, so the investors get that benefit. So it's actually, if you like the fund managers that are managing the money, it's a fantastic deal for investors. So it really is a win-win-win. Like it's a win for the investors. They're getting exposure to the best boutique fund managers in Australia and globally. It's a win for the individuals, the investors. It's a win for the fund managers because they're giving back, and it's a win for the charities because they're getting money over time, which is fantastic.
I think back to that time. Sorry. Go on, Jay. Keep going.
Oh, you go, Peter. It's all good.
No, I was just going to say, when that opportunity was presented to us, and it was just great because, again, this chat with you today is so easy. And I remember meeting with you, and we were a little bit unsure because, we were stepping into unknown territory. But you and your team made it so easy for us to engage with you, and the opportunity that presented. Like we've been blessed as a business. We're very community oriented. That's what we want to be. But for our client base to be able to have them aware of what we're doing, and what their investments are helping do for communities broadly. And we go to our client base and ask them for nominations of charities that they might have an involvement with, those sorts of things. But it's just been a really exciting growth in our capability and our community commitments for a business. So I thank you and FG for allowing us to be part of the journey. It's been fantastic.
And we've got to thank the fund managers to manage the money for free, because it's only by them doing that. But as I said at the start, you don't see a poor fund manager. So that it's not as if they're doing quite well. And so that effectively allows the investor to get a good deal and the charity to get an annuity stream that it normally costs them a significant amount of money to raise that.
Yes, absolutely. Sorry, JB.
Geoff, I was just thinking about that. You talk very matter-of-factly about seeing the opportunity in the UK, and it was a great model. But I mean, there's plenty of people that aren't philanthropically minded and don't take the opportunity to give back in ways when they have an opportunity to. What was it in your history, your upbringing, your professional life that brought you to the point where you thought that this was a worthwhile thing to actually commit time and energy to?
I think it is sort of a little bit of that Maslow's hierarchy of needs. So you when you're young and you're in your 20s and your 30s. I know these days, like probably when Peter and I, you're younger, Jay, but when Peter and I were growing up, in our days, the probably focus was on earning money, having a few drinks, earning money, chasing women, or whatever. And I know young people these days, they want to change the world and they want to give back. But back in the sort of the 60s and the 70s, it was a little different. And I think myself personally, I got to a situation where I'd seen it at home. I'd sat in my dad's car, when he used to do rounds on Saturday morning to see patients and yeah, so I'd sort of seen, being involved and looking after the community, and then personally, I was in a situation where the business had grown over 15 years, was making good money, and then I just saw what a beautiful model to sort of marry my experience in the financial markets and give back to the community. That was the logic. And then the funny thing is, when we did the first one, Future Gen Australia, FGX, that's someone said, look, will you do a global one? And like that had taken quite a lot out of us to raise the money for that. And I said, no, we're not. And then I suppose, then sort of a year and a half down the track, it's probably like women having children. It's a tough exercise. And then you're quite proud of what you've achieved. And then you think, well, hey, I'm happy to go again. So we did the other one. And now the beautiful thing is there's a number of other, like our two entities have value. They're about $1.1 billion of assets. So that's about $11 million goes to support the Australian charities in Australia focused on youth mental health and children at risk. But there's other ones that have listed and unlisted. So now the whole sector is about a little over $3 billion. And I think I was copying this gentleman in the UK, and I think they've seen what we've done, and other people have copied that, which is, to me, it's brilliant. It's a win-win-win. It wins for everyone.
I think your point, Geoff, about Jay's question to you about why you would think to do that, because unfortunately there's a significant proportion of the population that do well and just then want to do better. They want to do well on top of doing well, and that accumulation of wealth seems to be the driver to the exclusion of lots of other stuff. But as role models, as you're talking about your parents and travelling around with your dad doing community stuff. I wasn't, I didn't have a doctor and a nurse as parents, but I had the most wonderful mum and dad that just gave to the community in as many ways as they could. So that sort of that role modelling of being a contributor to your community was just what you grow up as part of your DNA. And then when you've got to the point where you satisfy your needs, well, you want another driver, don't you? You want something else that puts a bit of a spark in your step and make something you can get enthusiastic about. So being able to then take your energy into something that doesn't require you to make a buck to feed the kids or pay the mortgage is really, that's a win for you personally, because there's such a good feeling that comes out of it. So it's not selfish, but I think there's a great degree of goodness that comes back to you doing good things, which is, I think that's a fantastic way to operate.
Yeah.
Sorry, I waffled a bit there, Jay. Sorry, mate.
No, that's okay. I'm used to you waffling, Peter. It's all good. It's good. That's how you're listening.
That's very wise words. I love you. Wise words.
Definitely. Thinking about our listeners, sometimes we forget that many of our listeners maybe aren't sophisticated investors, or they're not used to acronyms and jargon that we use. We've used the acronym LIC, and maybe it's worth just touching briefly on what exactly the FG companies, the listed investment companies, what are they when we say LIC?
Yes.
What is a listed investment company in very simple terms, Geoff?
Yes. So a listed, it's a company that is listed on the stock market. It's like, one of the banks, NAB or BHP, that company is listed on the Australian stock market. So it's a company structure. And it's a pool of capital that is managed. It's a listed investment company, and that pool of capital is invested in the Future Gen example. That pool of capital, we've given that to, say 13 or 14 of the best fund managers to manage the bits of the company. So how do you get exposure to that is you need to buy a share. Or you buy like $1,000 worth of shares or $10,000 or $100,000 worth of shares. And so you become a part owner of that company, and that's an investment company. And as I mentioned, there's Future Generation Australia, which invests in, gives the money to Australian fund managers that invest, the smartest Australian fund managers we could find that invest in Australian companies that they think they will make money out of. And then Future Generation Global, the pool of capital that has, that which you can buy by buying a single share on the stock market. That pool of capital then is given to global fund managers, the smartest ones we can find, that then manage that money pro bono, put it in their main accounts and invest in global companies. So it's really an efficient way. It's like a managed fund. When people give money to a fund manager in a managed fund, the difference is it's listed on the stock market. Now, the positive of being listed on the stock market is at various times, Warren Buffett talks about the stock market being a weighing machine. It depends, what the demand or the supply is. At various points in time, that the listed investment company, like say FGX, can trade it above what the assets are worth, and various points in time it trades below what the assets are worth. Currently, because there's the market's been a bit uncertain the last couple of years, it's actually trading, both FGX and FGG are trading below what the value of the assets worth. So it's actually an incredible time to be investing in those two companies, because you've got, say, $1 of assets and both of them are trading around 85 cents. So you actually get, say you're putting 85 cents of capital to work, but you're getting $1 of value. The share prices are above that, but just as an example, so you're getting a lot more bang for your buck if you're buying those listed investment companies now. And some people say, well, actually, I own them. They're trading below what they're worth. To me, you don't have to worry about that, because the market, it eventually corrects itself. They have traded above what they're worth. They've traded at premiums to the value of the assets, and they've traded discounts. And to me, if you take a medium-term view, you want to try to buy them when they're trading below what they're worth, and when they're trading above what they're worth, then feel free to sell them, and then wait till they trade below what they're worth, because
buy them again.
That's what happens, and buy them again. And the great thing is, because they're a company structure, they're different to a trust, where the company structure, when the funds make money in the company structure, the company pays tax. So it actually has the ability to pays the tax, and then it can pay out fully franked dividends to its shareholders or its investors. And at the moment, both the Future Gen entities, they're actually paying quite very good fully franked dividends of around 6%. And I don't know, Jay, you look a bit young for us, but I know Peter and myself, we've probably we've got a bit of money in our self-managed super funds. I assume, Pete, you have one. And so to me, we like franking.
My word, yes, please.
You're probably looking for capital growth, but Peter and I, we like franking.
Absolutely. It's a fantastic little bonus.
It is. Yeah.
I think that the concept of, sorry, go on, your turn, Jay.
No, I was just going to say, I was just thinking about, as you were talking through sort of barriers to entry for investment, and thinking about the breadth of clients that we have that are invested in the FG companies, through to from our high net worth clients to our kids and grandkids of our clients. One of the great things historically, I suppose, with investing in the share market, there was at least a perceived barrier to entry, being able to get some diversity and have sort of expertise and decision making done on your behalf. I think one of the things that we've noticed, but even with our younger clients, the opportunity to be invested in education around their own financial literacy and actually understanding what they're invested in. But I think on the flip side to that, actually understanding the potential impact. And I think that's where we as a business, and I'll be honest, over the course of the last 6, 7, 8 years that we've been involved with FG, it's been as much a learning experience for myself and the members of our team to actually understand the impact that our clients and us as a business involved with FG has been able to have. One of the things I suppose I wanted to touch on, you mentioned it briefly, Geoff, about the assets under management, the 1.1 billion of assets under management, about 11 million this year, distributed to charities and philanthropic organisations with that sort of bent towards youth support. What are some of the what are some of the areas of support that you've seen over the last sort of 6, 7, 8 years where those, and I'll get Peter to touch on some of the Burke Britain community support, but from your perspective, what are the things that you're most proud of in terms of social impact?
Yeah, and I think, and when we sort of started off with FGX, the Australian, Future Gen Australia, and that's really to support children at risk, and it was really to it always had a bit of a bent of children that had a challenging upbringing, whether it was, I know we're doing this as a podcast, but I remember when we're raising the money for FGX, and I still sort of get a bit of a frog in my throat. One of the charities was Act for Kids, and they support children that have been that have been sort of had a really tough, very early life. And this is 1 year, 6 months to 1 year to to 1.5 years to 2 years. And I remember the CEO of that telling us a story about, I think showed an X-ray of a 9-month-old, and I think they had 7 broken ribs, had a broken leg, and that was just had just been abused by the parents, and when we went from that to really focus, when we did the global one, the focus was on youth mental health. And from my perspective is, if we could, it wouldn't matter how much money we spend, if we can save one life, like just one life, then it's all been worthwhile. So, our mental health support is, we're really focused on prevention now. Initially, with giving out money to the mental health charities. Initially, it was the larger charities. Now we're trying to get on the prevention side. There's lots and lots and lots of stories of different charities that we support. And the beautiful thing is, as you said, is we understand it, like it's democracy. There's a board, there's a company, but the shareholders, we ask them each year, we've got the list of charities, the main ones we're supporting, and we ask them each year, how do they want their sort of 1% that, would normally go to the fund manager, or more would normally go to the fund manager, which charities do you want that to go to? And a lot of the individuals, and as a learning experience, you can have sort of capitalism, you can, with sort of giving back. It doesn't have to be take. So you can learn about investing, and then also you can learn about the various charities supporting either children at risk or youth mental health. So to me, does that give you a bit of flavour, Jay?
Yeah, absolutely. And it's interesting where you're talking about the democratic approach and the opportunity to give shareholders. I mean, you've given us the opportunity to take that exact philosophy to our clients, which has been one of the most positive things, actually getting our clients involved and educated and understanding about the FG programs. And we've done exactly that. So I think for the last 5 or 6 years, we've given our clients the opportunity to nominate charities and organisations of their choice. That's probably a nice segue, Peter, into some of the organisations that we have been supporting, and maybe you might touch on some of your sort of personal connections with a couple of them. And you mentioned right at the start, Geoff, that we're just north of, just south of $1 million that has been contributed to some of our Geelong community and our Shepparton community charities over the course of the last 6 or 7 years, which was pretty amazing. PB, did you want to touch on some of those and the involvement that you've had with them over the last few years?
Yeah, I'd love to, mate. The good thing about that, drawing on the democratic process and saying to our clients, we've got a very broad, diverse client base, and so our client base spreads right throughout the country. But if we focus on the Victorian area, clients who we look after from regional Victoria all over the place, Melbourne, etc., as well as the Geelong region and Shepparton specifically, where we've had offices. But from that, our clients have been able to nominate many, many options. And I think over the time, it's something close to 70 different organisations have received donations through the FG allocations that we've been able to direct. And that they were largely charities and children's focus, charities that our clients have nominated to be considered. And I think there's a few of them that are particularly important to us. And I'm lucky enough I was invited to and went through the process, and I'm on 2 of the boards that we support with the donations. And Kids Plus Foundation, or Kids Plus now, we removed the foundation from the formal name, look after children with cerebral palsy essentially and provide wonderful services. It's been an organisation that began in the early 2000s, and now we've got a terrific organisation out at the Deakin University site. Sean Cannon, the boss, is a wonderful bloke who's running a terrific business, and numbers of full-time staff looking after something like 300 young people a month who need cerebral palsy support. The speech therapy, physiotherapy, occupational health therapy, the range of services that's provided is wonderful. And, we've been able to significantly impact. One of the key things that I'm very passionate about is education. In my previous life as a school teacher, and we've set up with the Kids Plus Foundation a scholarship fund. So that will be able to assist the provision of support for children that, come through the end of their schooling and for a variety of reasons find it really difficult to get something, their physical health issues prevent them from getting a job or seeking something that can generate income for them. So we're reasonably flexible, but we're looking to provide opportunities for those young people beyond their schooling years to help them keep feeling like they can grow and value add themselves. And the other foundation that is really important to us as a family is the Wombat's Wish Foundation. We look after children who've lost a parent. And, Joe's got 4 nieces and nephews, and I've got 4 grandkids that have lost a parent. So for us, that's a really critical support. And Wombat's Wish do a wonderful job running camps for children who've lost a parent, so the surviving parent and siblings, kids that have lost a parent. An incredible service that is really invaluable to provide those young people a chance to see that they're not unique, that it's not just them that suffered, and finding some coping strategies. And others, we look after Food Share. They provide food services, provision of things when times are tough. And through COVID, they provided enormous amounts of support for the Shepparton community when people couldn't get out to shop. That was an enormous benefit. And we've also got Geelong Mums in Geelong, part of the St Kilda Mums group, who provide services for, so women who might have kids and have been through a really awful, violent relationship stuff. Suddenly they find themselves in an awful position, can't feed the kids. One woman we were introduced to stood to lose her brand new child because she was not in a position to look after the child. Well, Geelong Mums support them with a range of different things to help them get through that tough period of their life. Geelong Youth Engagement take young people from at-risk kids in high schools and put them through programs and take them and do the Kokoda track to give them some sort of self-awareness, self-capability, personal their self-image improvement. And again, one of my good mates runs an organisation called You Thrive, scholarships for regional kids who are disadvantaged to allow them a chance to do a tertiary education course. And again, opportunities for children who might otherwise not get that chance, it creates opportunities for them. And a couple of others, like River's Gift, a local one that worked to try and help with research on SIDS issues, parents that lose a child through SIDS. So, and I could go on for hours and hours, but for us as an organisation and personally for us to be able to have, through your support through the FG program, to support those sorts of organisations that they don't get government funding, they don't get free handouts, they've got to go and seek philanthropic support. To know that we're helping make a difference, it's just empowering, it's wonderful and uplifting. We're very privileged. And we thank you again for allowing us the privilege of allocating those funds, Geoff. It's been wonderful.
Hey, it's easy, Peter. We're just the man in the middle. We've got to thank the fund manager for not charging the fee, which allows...
Yeah. But you had to have the idea, mate. You had to have the idea. You had to have the courage, the time and the effort to create the concept.
Yes.
And, plenty of people can think about it and then do nothing about it, but you chose to do something about it. So massive pat on the back for you. Well done and thank you.
Thank you.
Yeah. It's probably a good opportunity to give a pat on the back too to those client nominations too who have shared some of the other through their own investment have nominated charities that are close to their heart. So to all of the clients out there that have nominated, thank you again. Listen, I'm mindful of time, Geoff. I wanted to. We've talked a lot about the history of Future Gen, yourself and Burke Britain, but maybe if we could just take an eye to the future and maybe look at what the aspirations for the future of the future generation companies are and what's planned in the coming weeks, months and years. What's happening in the future?
I thought you were going to ask me what the stock market's going to do. Maybe I can do that. I'm happy to have a go at that. That can be my second part. But I mean, the real focus for the future gen ones, as I mentioned earlier, they're trading below what they're worth. So, we manage we manage 8 listed investment companies, and they're Wilson Asset Management ones, and their brand, it's WAM something, WAM Capital, WAM Leaders, WAM Global. And sort of half of ours trade at premiums and half trade at discounts. With the Future Gen, we've got both of them currently trading at discounts, and our real focus is, we've got the really smart fund managers, and they'll continue to perform. And we're very happy with them, and we've changed. Like, there's no free. It's not a free holiday. Just in if you're a fund manager in there, I think we've sort of removed about 15 or 16 of them. And that's because they've performed poorly, or there's been a management change, or just like you guys, would select different managers from, there'll be a reason why you don't believe they serve you well at that point in time. So even though they're managing it for free, it's still very professional. The board's pro bono, the investment committee, high quality is pro bono, but they live or die by how we all live or die by how we how the managers end up performing. So the real focus is, we've got the good managers. It's to get the share price to reflect the assets, and that's probably about 15 to 18% higher than where they're currently trading. Now, obviously, you're getting a nice yield, so that's our real focus over the next 6 to 12 months, is to get both of them trading at NTA, if not a premium. And historically, they've traded at premium. So get them back to where they should. That's where they should be. They should be at premiums. And that's pretty much the main focus. And then once they get to premiums, then there's potential to grow them. But we won't do that until the share prices are trading above what they're worth. That's on that. And in terms of the stock market, I'm probably like Peter, yourself, Jay. We've people have got a bit of age. we're surprised that there hasn't been. Well, okay, Jay, maybe not yourself, maybe Peter and myself. Okay, so I see your eyes. That's right, opening your eyes, maybe. You're young, but that's just the beard makes you look older. And Peter and I have very little hair, so it makes us look younger. No. But with the market, sort of last year, I was surprised that we hadn't had more pain. It just seemed, hey, this seems too good to be true. Like the market, interest rates have gone up a lot. Why hasn't the market, come off a little bit more? Even though there was, say the 6 months to December, I think the market was up 7 or 8%. The 12 months before that, I think the market was up 13 or 18%. So over an 18-month period, that's a pretty solid performance from the market. So therefore you'd say, oh, look, Geoff, are you bearish? I'm actually not. And the reason I'm not bearish is because sometimes you can't fight against the market. And two reasons why I'm not bearish. One is this is an election year. Like we know the US economy is the biggest economy in the world. So and I was taught in the early 80s when that you tend to find that the last year before the US election, whoever's in government pumps money into the system because they want to get re-elected. Exactly. So I think it's something like 75% of the time the market's gone up in that year. So it tends to be a good year. The first year of the new electoral term in the US tends to be a bad one. So that's sort of next year. So calendar this year. And also like the US market and the Australian market, it's hitting new highs. And you tend to find markets sort of don't hit a new high for a day. It's sort of like a stock. It doesn't just hit a new high and then it falls 20 or 30%. You tend to find that markets and stocks, there's always a degree of momentum to them. Tend to hit new highs for a period of time. And then if you want to sort of then mentally think, we're a little bit more bullish, then what's the rest of the case for that? Well, falling interest rates, stimulatory to the economy. I know China's still in a mess. I know globally, geopolitically, we've got all the global problems. We're worried about World War III. And the weird thing is, when I was in my sort of early years in stockbroking in Melbourne in the early 80s, I remember they used to always say, look, bull markets climb a wall of worry. So, I mean, we can easily put the wall of worry there. So if you'd done this podcast the latter part of last year, I would have been a bit more bearish. But I just think it's sort of set up for a reasonable 2024, even though, hey, look, it's a crystal ball and who knows what it's really telling us.
I think, maybe a lot of those uncertainties have been priced in, haven't they? A lot of the stuff that's going on around the world, the market usually preempts a lot of that stuff. And so if they're still doing okay in spite of some of the scary stuff that's happening, maybe it'll be volatile. I'm sure it'll be a volatile 12 months, but it's hopefully it's going to be ticking along in a positive direction, Geoff.
Yeah, let's hope. Even though for a lot of last year, I would have. If I was on, I'd say, I'm bearish. Only because, we got that election year and the markets have pushed through. That's why I'm sort of turned a little bit more bullish.
We won't hold you to it.
So we can, perhaps we can organise a round two in a few months' time and we'll see how that prediction looks with the fullness of time, Geoff.
Great idea.
Listen, I'm very appreciative of your time. One of the things I wanted to conclude with is where else people who are our listeners, our clients, can get more information about Future Gen. Where can they find more information about WAM and Future Generation on the interwebs? Yeah,
that's right. It's Wilson Asset Management. Just Google that and just Google Future Generation Investment Company. Wilson Asset Management, we promote Future Generation. And anyone who's got any questions, because the beautiful thing about listed investment companies, as distinct from managed funds, is if you buy a share in one of the Future Gens or one of the WAM capital entities, you're a part owner of that business. And, say myself as chair of some of these, I understand all shareholders are important. So if they want to communicate with us, then they're a part owner in the business, so they've got every right to communicate with the board. And the board's only there because of the shareholders. So, and the manager's only there is to manage money on behalf of the shareholders. So I think what a lot of managed funds, what I've found over time is people try to contact the people that manage funds and they just go down a rabbit hole where boards, well, I know ourselves, we fully understand that shareholders, we're only managing the pools of capital we have because shareholders allow us to do that. So if you've got any thoughts or ideas or questions, please feel very free to ask us. And again, Joe and Peter, look, thank you for the support. Thank you for being incredibly innovative in terms of what you've done. And as I mentioned earlier, for the community you operate in, you've effectively taken close to $1 million that would normally go to a fund manager. We've created a structure. I mean, it'd normally get more than that because we're paying less than the guys normally charge, and you've given it back to the community that you operate in. Or I suppose your investors have done that. You're probably more like me. We're the man in the middle. We've allowed the structure for it to happen, but your investors have decided where it goes. And as you said, to me, you've had an incredibly broad reach. There's close to 70 organisations that you've supported in your area, and it's only because of your investors that have allowed that to happen. So hey, well done and congratulations.
And I say again, we are incredibly privileged to be able to do that. So the link with you guys has been wonderful because it gives us a wonderful privilege that we can. And we're not taking credit for it. We're just helping to distribute it, which is
and the beautiful
great opportunity.
Exactly, and the beautiful thing is we know we've all got to perform, because if we don't perform, we have no funds. There are no funds to manage. So everyone's totally
good motivator.
Focused on that. Exactly. Totally focused on that.
All right. Yeah. JB.
Very good. Well, thanks again, Geoff. I'll make sure that I link to everything in the show notes where people and listeners can locate more about Future Generations. Thanks again. I look forward to possibly a round 2 and a round 3, given the opportunity in the future. Maybe we can, Peter, or I can follow you to Noosa or New York and bring the microphones and
love to do a podcast from there. Or when I'm in Melbourne, or when Geelong's in the grand final. Hey,
that's a good idea.
Or maybe the Bombers.
Yeah, well, I can just say thank you very much, Geoff, for giving us your valuable time, and it was a wonderfully informal but very informative and good fun chat. I loved every minute of it. Thank you.
Good to chat. See you guys.
Take care. Bye.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britain FP, or Google Burke Britain Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to, don't be a moron and act on what some random person says on a podcast. Take personal responsibility, do your homework, ask questions, and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britain Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.